You were listening to the CMQ Investing Podcast. My name is Chris Franco, and everyone is freaking out. It's understandable. We have record high inflation. We have gas prices through the roof. We have interest rates that we don't know what's going to happen with. We have, well, I could just go on, but it's pretty anxiety inducing. And the more anxious we get as investors, even if you consider yourself a long-term investor and you fully internalize the power of compounding and, you're applying everything that you hear on this podcast and elsewhere, it can still be very tempting to make some sort of panicky move. And what I want to do in this episode is share with you some wisdom from Warren Buffett, from Charlie Munger, and at the very end from Jack Bogle that I turn to help me just tune out all these macro forecasters. I'm talking about the folks who are on TV, they're on YouTube, they're telling you the recession's coming, here's our prediction about the bear market, here's where we are in the cycle. All this stuff that does nothing but cause anxiety. Now, to be fair, I consider that entertainment, but just because something is entertaining doesn't mean it can't lead us to do something, maybe a little suboptimal from a rationality standpoint. So I feel like this is very important, it's timely, so consider this a bit of investing therapy. Pull up a chair, lay back. If you're in a Tesla and you have autonomous driving, just turn on the cruise control and close your eyes. Now, I'm just kidding. With that said, though, let's get into it. So I mentioned turning on the news and just being more anxious than I am when, I go to the store and every day, whatever I'm in there to buy is a little bit more expensive than it was last time. But, you turn on CNBC and you might see Kevin O'Leary in his tuxedo talking about his inflation playbook, or an investor with some sort of fund who's, giving you his take on where we are in the bear market, or, a famous ETF investor who says they know exactly what the chance of a recession is. Now, again, entertainment, but it does cause anxiety. And what I see happening across the web, places like Reddit, is people are freaking out. And I don't doubt that it's not limited to places like Reddit. And by the way, I don't mean Wall Street Bets. I mean just, kind of the more standard subreddits for investing. But I hear it from my friends. I see it with the CMQ community. It's very easy to be nervous right now. Even if you've got your portfolio set, your dollar's being eroded, everything's more expensive, and it feels like the world is on fire. I didn't even get into all the issues, right? But what I want to get into a little bit here is the wisdom that can help us just see the big picture and remember what to tune out. I really feel like one of the biggest advantages that I found as an investor, an advantage that I was able to obtain without really having to do anything, is just knowing what is nonsense. It didn't come overnight, but hopefully I can save you some time. And if you already know this, then it can reinforce it and just, give you a little bit more calmness for your day. So let's start off with something that Charlie Munger said at the Berkshire Hathaway meeting. I believe this was in 1994. He says, if you're agnostic about those macro factors and therefore devote all of your time to thinking about the individual businesses and the individual opportunities, it's a way more efficient way to behave. What he's talking about there is the macro factors. This is, someone saying, hey, we're in a bear market, or, are we going into a recession? There's nonstop content about this. And so, it's not new to this time period. This has been going on in terms of, this has been, great stories for the papers or now in the internet. And it's important to keep the big picture in mind. But beyond the big picture, remembering what investing is actually all about. Because you only have so much time to really think about the things that matter. And from my perspective, in investing, it's all about businesses. That's what it's all about. You don't even have to pick individual stocks, but if you're just interested in learning about business, there's really no better way than to think about businesses and what makes one good and what makes one bad and why. That's something that both Warren and Charlie have said over the years. That would be a better education, for most managers, but they don't provide that in most schools. So before I turn this into a condemnation on the academic system, just kidding. The following quote is from Warren Buffett. It was also at a Berkshire meeting. I believe this was from 2012. Warren said that if we find a business that we think we understand and we like the price at which it's being offered, we buy it. And it doesn't make any difference what the headlines are. It doesn't make any difference what the Federal Reserve is doing. It doesn't make any difference what's going on in Europe. We buy it. And it's funny because that quote could really be something he said today. As you guys have probably heard, I know we've talked about it on the podcast, or at least on the CMQ Investing YouTube channel. Warren Buffett has been on a buying streak, and we won't get into all of that, but he doesn't really care that the world's on fire right now. That doesn't affect him. He's been through time periods where the world's been on fire, but at the end of the day, typically what ends up happening is, everything works itself out. It doesn't mean that it's nice or it's pleasant, but he doesn't get caught up in focusing on things that actually don't matter, meaning, trying to predict what's going to happen next. At that same meeting, Warren Buffett said that Charlie and I don't pay any attention to macro forecasts. Now, you might still want to pay attention to them. I know I don't, but it's a nice reminder. And they're not saying that because they have some incentive to not, turn on CNBC or, you still might see it. You just don't take it seriously. You could watch it for entertainment, see what the different pundits have, what side they take in the debate, but it's not going to impact you as an investor. The only way it would really impact you is if you start thinking you're smarter than the market, or that you can time the market, or you're able to predict what the economy is going to do. That's when that overconfidence that we always talk about is putting you in a bad position. So hopefully you won't do it. But Warren Buffett also said in 2013, also at the Berkshire meetings, that if there's a good business at a good price, we buy it, because there's always going to be bad news out there. Now, I want to be clear. I'm not suggesting anyone should be focusing on buying stocks right now. That's obviously it's your call, but I don't think that's, for most individual investors, that would be something very risky right now. I know for myself, I do have individual stocks in my portfolio, but the majority of my stock portfolio is in low-cost index funds, specifically the VU and the VTI from, before I got really into the VU. What I want to call out about that, though, is, it doesn't mean that you still can't look at businesses. It doesn't mean that you still can't, do this exercise and read 10Ks. I mean, I find so much value in learning about just the businesses that I interact with it just helps me understand the world better. And if there is that time, as Charlie says, opportunity comes to the prepared mind, there might be, that once in a lifetime opportunity where I see something that, I'm uniquely qualified to see and I can take advantage of it. But if not, then I'm perfectly happy compounding my money quietly, achieving hopefully at least the market rate of return over a 30+ year period. It's very difficult for that to turn out poorly, even if we don't see the same returns in the next 30 years that we did in the previous. Now, I want to, before we get to Jack Bogle, I want to make sure I explain why these macro forecasts are useless. Not just because Warren Buffett says or Charlie Munger says. It's because we live in a complex system. The economy, you could argue, is like a complex adaptive system. Everything interacts with everything else. There's just countless interactions. It's impossible to say what causes one thing to happen. It's always more than one thing. And furthermore, very rarely are you going to see the exact same sequence of events lead to the same outcome. And this is, by the way, backed up, proven. Scientists are in on this stuff. It's one of the reasons why Charlie Munger's, advice to learn all the big ideas from all the big disciplines is so useful. As I did that and I took that idea seriously, when I came across and learned more about complex systems, things made a lot more sense to me and I knew to tune them out. Something I've learned over the years is that even with perfect data, it's impossible to make perfect predictions about the future. So when you consider that, how can anyone know what's going to happen next? Now, I don't fault these people for thinking they can, because most people aren't going to learn about complex adaptive systems or, just basically pick up some big ideas from some disciplines where they weren't formally educated. And that's why Charlie Munger is the man, because, what he was recommending doing back in 94, and I went out and did it, it was so useful. And it's a great example right now where I'm not saying I'm smarter than anybody. It's just I did the thing that the guy who I know is really smart and successful said to do. And sure enough, I can see things more clearly than perhaps someone who's way smarter than me at this particular subject. Maybe not. Maybe I'm just a big village idiot. But in the meantime, I'm staying calm because I'm trying to internalize and apply this wisdom from the greatest investors of all time and people that I just trust. And secondly, I understand what this system that I'm dealing with is and what it's, what the limitations are for myself as a human being and what I can actually, do. I can't predict the future. I couldn't tell you when the recession is going to be or if it's going to come. No one can. If they do, tell them to do it 100 times in a row. It'll be like they're flipping a coin. That's just the reality, the absolute reality. So with that said, let's finish off here with some Jack Bogle. I'm going to paraphrase here. This comes from a speech that Jack Bogle gave in 2001, and it was called The 12 Pillars of Investing Wisdom. And this is pillar number 12. Do not let transitory changes in stock prices alter your investment program. There is a lot of noise in the daily volatility of the stock market, which too often is a tale told by an idiot, full of sound and fury, signifying nothing. Stocks may remain overvalued or undervalued for years. Patience and consistency are valuable assets for the intelligent investor. The best rule? Stay the course. Now, this wasn't, in response to a looming recession or, record high inflation, but this idea that All the noise is just that. It's noise. The most valuable assets you have are your patience and consistency. The patience, that's one I struggle with, and I think a lot of us do. The consistency is one that, that works very well for me. And that's that compounding, right? You consistently stay investing. You don't let up. You continue to stay the course. The patience is just being willing to wait for a really long time period and having to defer gratification. I've gotten better at that because I recognize the value in being patient, but it doesn't come naturally to me. And that's just, I'm glad I can share it with you. Now, 2001 was, I'm not saying it's the exact same as it is now, but this was after, the dot-com stocks, just kind of the air came out of them. And Jack Bogle continues here and says, during the past 2 years, the stock market's noise has been the loudest in history as volatility has reached record highs. Millions of speculators are scared half to death, as they should be. But long-term investors must realize that as greed turns to fear, much of the worry is already reflected in the lower level of stock prices. And even if it turns out that we should be reducing our stock positions until the decline is over, where on earth would we ever get the insight that tells us the right time to get back in? I love Jack Bogle, man. Jack Bogle, what a hero. He continues, one correct decision is tough enough. 2 sequential correct decisions, both made at the right moment, are nigh on impossible. Impulse is your enemy, and patience and consistency are your friends. Of my 12th pillar of wisdom, think long term. I can only say, amen. Now, I want to call out just a little thing here. And again, this is the first time I read that in whole. Jack Bogle says, one correct decision is tough enough. 2 sequential correct decisions, both made at the right moment, is pretty much impossible. Now, that is going back to this idea of worldly wisdom. Charlie Munger talks about the importance of understanding probabilities. It's one thing to say, you pick a stock that's, beats the market over a 10-year period. Now, let's say you sell out of it, and then you have to pick another one that does the same thing. The probability of that is low, or it's lower than what you think it is usually, because our brain is not that great thinking in those terms. But if you can understand that the world sort of works in probabilities, and you can humble yourself to realize that there is some luck involved here, and in that case, a lot of luck, you can avoid some big mistakes. I think one of the things that might be, very much on people's minds, and I don't know this for a fact, but I want to conclude with this. I didn't plan to say this, but I will. After a really great, I guess, bull market where, you really didn't have to do much to do well. I had a year, was it 2021? I got like a 62% return. I mean, I didn't deserve that. I did sensible things. Let me give myself a little credit. But I mean, the market was just so frothy. And, when I look at that, I could easily say, hey, I'm, look out, Warren Buffett. I'm Warren Buffett. And I could be, trying to play in and out of the market right now. That would be a great way to get my head chopped off, metaphorically speaking. And that's a great example where we have to just be humble. And all this macro stuff, all this, fear mongering or panic porn or however we want to call it, it's just entertainment. It's noise. Tune it out and know that it doesn't matter for what you're trying to accomplish. I hope this is helpful to you. I hope it gives you a little bit of, a little bit of an anxiety reducer, or just reminds you of some things that you already knew. So I appreciate you for listening. This is CMQ Investing, the CMQ Investing Podcast. My name is Chris Franco. I hope you'll leave a rating, leave a review. Make sure you subscribe. It's all free. And that way you will be first to get our episodes as soon as they drop. So thanks again for listening, everybody. And don't forget, if you're new here, there's 90-something episodes already. So there's quite a catalog for you to skip around and find something you like. So thanks again. Talk to you soon.